If you are a founder and "I'll sort my bookkeeping later" has been your line for months, we need to talk. Not because you're bad at business. Most founders I work with are brilliant at what they do, but bookkeeping, that's a different skill, and nobody taught it to you. So today, enough with the excuses. Here are the 7 simple steps to get your bookkeeping started. Let's go. Step 1, separate your business money from your personal money. I get it, when you're just starting out, it feels easier to keep it all in one place. One card, one account, less admin. But here's what actually happens. You can't tell what your business is really spending and what it's really earning. And when tax time comes, you're stuck scrolling through months of transactions, trying to remember which transaction is business and which is not, which means bookkeeping becomes slower, more confusing, and more likely to contain mistakes. Open a separate business account. Get a separate card, even if you're a one-person operation. This single step alone will save you hours of confusion later. Step 2, choose your bookkeeping system. You've really got 3 paths here. Spreadsheets, like Excel or Google Sheets, they are affordable and simple, but they get messy fast once your business grows. Transactions may be entered twice, formulas may break, and important entries may simply be forgotten. Instead, you may use accounting software such as QuickBooks Online, Xero, or Wave. They are more powerful, they can connect with your bank accounts and generate reports, but there's a learning curve and a cost attached. Plus, you need to review the transactions too. Or you may hand it off entirely to a bookkeeping service, so someone else manages the system while you focus on running your business. None of these is the right one for everyone. The right one is whichever matches your budget, your time, and how complex your business actually is. Just don't skip this part unless you want that 6 months of transactions pile up unrecorded. Step 3, single entry versus double entry. This one sounds technical, but stay with me. Single entry bookkeeping records one line per transaction, usually just cash in, cash out. It's simple, easy to set up, but it gives you a pretty incomplete picture of your business. Double entry records 2 sides of every transaction, so you always see the full picture, where money came from and where it went. It's the standard every serious business eventually moves to because it's simply more accurate. If double entry sounds like a lot to manage alone, that's exactly what accounting software or a bookkeeper is built to handle for you. Step 4, cash versus accrual accounting. This decides when do you actually record the money. With the cash method, income and expenses are recorded when money is received or paid. It's simple, and most small businesses start here. With the accrual method, you record income when it's earned and expenses when they're incurred, even if payment happens later. It might sound more technical, but it gives you a far more accurate picture of your actual profit. There's no universally correct answer here. The right method depends on your business, reporting needs, and tax requirements. So get professional advice if you are unsure. Step 5, recording transactions consistently. Now the actual work begins in this step. That is, recording your transactions. Daily, weekly, monthly, whatever rhythm fits, you just have to make it consistent. Every transaction that goes through your business should end up being recorded. And not just the amount. Note the date, customer or vendor, category, and a short description. Future you, searching for that one transaction from March, will be very grateful you did this. And a small tip here, do not wait until tax season. The longer you wait, the harder it becomes to remember what a payment was actually for. Step 6, sorting transactions. Once a transaction is recorded, it needs a home. That home is called an account, a category where similar transactions live together. A sale goes into revenue, a software subscription goes into expenses, and so on. Accounting software may suggest a category, but the suggestion can be wrong. A payment to a contractor should not be treated like payroll. A loan payment may include both principal and interest. Your full list of these categories is called your chart of accounts. This is what eventually lets you build real financial statements. Your income statement, showing what you earned and spent, and your balance sheet, showing what your business actually owns and owes. Step 7, storing records. It's the one people skip most, storing your records properly. It's not enough to record a transaction. You need to keep the proof behind it too. The invoice, the receipt. Store it digitally, in the cloud, or in your accounting software. Whatever works, as long as it's organized and backed up. This is what keeps you protected if you're ever asked to show your records, and honestly, it's what keeps future you from panicking during tax season. And once you've done all 7 steps, you basically just repeat steps 5, 6, and 7 over and over forever. That's the job. Now the 2 bonus habits that really matters. Tip 1, set money aside for taxes every single month. It's the habit that prevents that horrible moment of realizing you owe money you don't currently have. A simple, separate tax savings account can help you manage this. Tip 2, reconcile your bank account every month. That just means comparing what your bank statement says against what your books say and making sure they match. It's a monthly checkup that catches small errors like finding missing transactions, duplicates, or incorrect amounts. Now, if reading through all 7 steps felt like a lot, that's because it is a lot, especially while you're also trying to run your actual business. That's the exact gap BizFile fills. We handle the recording, the sorting, the storing, the tax planning, all of it, so your books stay clean every single month and you can have time for your business. And remember, messy books rarely become easier with time. The sooner you organize them, the easier your next business decision becomes.